and welcome. You're watching the weekly edition of Your Trades with me, Snehisha. With me is Priyanka. And well, Priyanka, what a recovery we've seen towards the end of the week coming on the Nifty. Nifty firmly above that 24,500 mark, sitting comfortably at 24,540. And that's how we've shut shop for the week when it comes to the Nifty. Quickly take a look at what the week looked like. Nifty snapped its 2-week losing streak. Tech Mahindra, Wipro were your biggest leaders. And remember, IT is a sector that has outperformed the entire market over the course of the week. Almost a 5% uptick coming in on that sector. Mid-cap has also closed in the green. You have PB Fintech as well as Paytm, your biggest gainers from the mid-cap pack. IT, like we mentioned, it snapped a 2-week losing streak, and Emphasis, L&T Tech, all of these were stocks to watch out for. And it's also registered a biggest single weekly gain in 10 weeks. So clearly, IT continues to be an outperformer. Nifty Realties also beat its 3-week losing streak. You have Auto also snapping a 2-week losing streak. So basically, all of your sectors looking quite resilient at this point. However, when you talk about the losers, on the flip side, you had PSU Bank that continued its decline for the 4th straight week, and Union Bank and Indian Bank were your top losers on this front. Energy fell for a 2nd week, metals fell for a 3rd week in a row. FMCG has also ended the week in the red. Varun Beverages and United Spirits were the one that dragged this index more. However, you also had Nifty Pharma that snapped a 3-week gaining streak. Zydus and Divi's, they dragged the most, and Nifty Bank has managed to close a flat for the course of the week. Quickly also taking you through other newsmakers, the big news that came in from the Supreme Court that states can impose mining tax with retrospective effect from 1st of April 2005. So that was a big negative coming in, and mainly because of that, metals were tanking away. SAIL, NALCO, Hindalco, JSW Steel, lots of stocks to watch out for on that front as well. You had a whole host of earnings reactions. Well, this week marks the wrap of earnings as well for Q1. Lots buzzing on that front. You had Ola Electric also, that was in focus. But Priyanka, tell us more about that.
Absolutely. In fact, the kind of recovery trade you mentioned about, it's not just that the Indian markets recover. In fact, globally, if you see, all the markets have made a smart recovery. And now, in fact, we're talking about the weekly gains now. US market is on a pace to register about 2% of the gains on Dow. Nasdaq is more than 4% up. And Nifty, in fact, nearly 1% it recovered today for the whole week. Broader markets where the cuts were more deeper, they have also on a pace of recovery. In fact, small cap was flat to positive, but mid cap saw a smart recovery, down about 1%. Clearly, the indices, the sectors which were the top of the list were IT and real estate. They spearheaded the complete recovery. Tech Mahindra, HCL Tech, Infosys, they notched the top weekly gaining spot also. PSU Bank, energy pack, metal pack, these were the losing sectors out of them. Many of the pharma stocks lost during this week. But then what we saw, specifically some of the key news which we saw in the week was for metal index, which took a bad hit post SC allowed states to collect past dues on royalties. And in fact, not just this space, in fact, space like energy, we did saw some stellar move coming in from ONGC oil. Later, however, the gains got paired, but then this week saw blockbuster earnings listing also. Ola share gained 50% from its IPO price. First Cry list at 40% premium. These were the two stocks. Today also, again, nearly 46% Ola has already made money for its investors. And not just Ola, in fact, two of the other Unicommerce and also First Cry, they also listed with a premium handsome gains on the premium day, and post that also following. There were a couple of stocks which were in news throughout the week. Aarti Industry especially, that tanked 16% nearly, and that was on the back of the weak EBITDA guidance. There were many other stocks, stellar earnings if you talk about stocks like Inox Wind, which gained nearly 17%. Voltas jumped 10% post reporting strong numbers. But then where are we headed from here now? We have almost recovered what we had lost in terms of the indices, but then now do we see legs to this rally, since the global worries markets have completely shrugged off the global worries? To take us to the direction ahead, what can be possible scenarios, we have two guests, Rajesh Palvia, who will give us a technical perspective, and we have Ajay Bagga to talk on the fundamental of the market. Welcome both of you. Firstly, a quick question on the fundamental side, because this was more to do, the damage was coming from the macro front. Mr. Bagga, tell us that since the US recession worries cools off, US seems to be on a disinflationary path, the kind of economic data coming in, talks are about Fed taking a rate cut in September, and so are the expectation building up for other central banks only. But in such a scenario, what could be the possible, and of course, this is a good news for the markets, but then I wanted to understand how would FIs approach the market, emerging markets in such a scenario where rate cuts are going to take place?
Yeah, Priyanka, as you mentioned already, this is the best week since November for the US markets. It's the best week of stock market gains in more than a year for Asian markets. And for Japanese markets, it's been a great week. So we started Monday with three big worries. One was the US economy, second was the yen carry trade unwinding, and third was the geopolitical risk from Iran taking some action on Israel and how big that would be. The big risk was on August 12th and 13th, a day of destruction of the Temple of Solomon. And the US assessment was that Iran would attack Israel either on 12th or 13th in a symbolic gesture. That didn't come through. It was a big relief for the markets. What happened on the US economy? Deflationary trend on both wholesale and consumer price index, as well as very good numbers on the retail sales growth and better than expectation numbers on the unemployment benefit claims. So overall, a Goldilocks kind of a US economy with price action going negative and the economy managing to hold up. That was a very good factor for the markets. On the yen carry trade, appropriate sounds from the Bank of Japan. The Japanese parliament next week is going to call in the Bank of Japan chairman and also the finance minister for a review. Talk of no more rate hikes from Bank of Japan. In fact, hedge funds went back with yen short positions, which had been cut nearly 60%. They have again started building up yen short positions, and you have seen the yen fall from about 141 levels against the dollar to 149. And that has helped the Japanese market, and that has helped also reassure the carry trade investors. What does this mean for FPIs? We are looking at now a 25 basis point cut in September. For the rest of the year, it's looking like a 90 basis points cut in all. When the rate cuts happen in the US, normally the dollar starts softening. As the dollar softens, emerging market flows increase and flows to the growth segments in emerging market increase. And that's what you have been seeing with IT being bought up in India. In anticipation of those moves, the market is already moving. So, three big factors didn't turn out as badly as we had anticipated in the beginning of the week, and markets are closing on a good momentum, and we expect this momentum to carry on from here.
So thanks for that view coming in, Mr. Bagga. Rajesh, I'm going to come to you now. Give us your sense on how you are seeing the IT space, right? Because this space has registered its single biggest weekly gain in the last 10 weeks, has been the biggest performing sector, outperforming all its other peers as well. And when you take a look at quarter one earnings, also have been more or less positive. So good numbers have also trickled in. Do you think this is the time for IT to make a comeback? Do you believe it has already started to make a comeback, and does it now look like a comfortable sector to you? And also, if you were to play this sector, how would you play it? Would you stick to the large cap names, or are you seeing more value emerging out of mid cap IT?
So it's a very strong rally in Nifty IT, almost 4.5% gain for this week. And the way Nifty IT index has moved up, there is a high possibility that, again, yes, we may see a new all-time high trajectory for Nifty IT index in the continuation of this up move. This really is driven by most of the large cap IT as well as the mid cap IT. The participation came from the both segment. Again, global volatility is also cooled down, and global markets are also doing good in last couple of days. So we believe that yes, IT could be the one sector where one can focus at this juncture, and possibly we could see a new all-time high trajectory for Nifty IT. And from large cap IT, I think some of the stocks where we feel that some more bullishness we can see in the near term, which is Infosys and TCS. These two stocks are looking promising based on the technical structure. And we believe that Infosys may continue furthermore upside, and possible target for Infosys we could see towards 1900 to 1930. And another stock from large cap IT space, that is TCS. Again, the way stock has moved up in last two trading session, there is a high possibility that TCS may also register its new all-time high trajectory in coming days, and possible target towards 45, 50, 4600 we can see in short period of time. So TCS can be looked at from large cap IT. Even from the mid cap IT, I think one should focus on Coforge as well as Emphasis. These two stocks are looking very promising. The way both stock have managed to give breakout of consolidation range, we believe in the mid cap IT, these two stocks can be looked at. Coforge for upside target of 60 to 50, and Emphasis we can see target towards 3100. So these four stocks one can deploy some long trade in for short period of time.
So so Rajesh is bullish on IT stocks and has given four recommendations from this space. Both of you stay with us. We'll stay for a short break here. More to come on the other side of the show. Welcome back. You're watching the weekly edition of Your Trades. We have Rajesh Palve and Ajay Bagga. Mr. Bagga, I also wanted to understand one interesting trend we saw was that PSU stocks, they have taken a backseat. You talks like stocks like HAL, BDL, IRFC, they've all fallen in 2020 more than 20%. Whereas new age stocks like Zomato, Paytm, PB Fintech, they are back in flavor, and in fact they've doubled almost from their lows from 2024. Is that the trend which you could see is probably the growth coming back? There could be more legs to this rally. PSU stocks taking a backseat?
It's what we have discussed earlier of defense and railway stocks, which are largely in the public sector, had become very overvalued, and a lot of the future execution was already factored in. So they were due for a correction. We have seen very good results coming through, and there is a growth on the top line and bottom line, but the valuations have gone into multi-year this kind of growth continuing. So it was quite viable that we would see some amount of consolidation, a breather for a few months, and then the next leg up starts as the execution comes in. As far as the new age economy stocks go, that's a function of growth and momentum coming back as a factor, and we are seeing that getting bought into. So again, a lot of it is based on future profitability. There are some which are already profitable, which have got recently listed as well. But most of these stocks are on a future growth path. That's what the market is buying. So it's a sector rotation that's happening. Is that valid? Time will tell. I myself would like to see cash on the cash flow statement. So companies that generate a positive cash flow and not just on future stories that we value these companies so highly. But who are we to argue with the market? There is a good demand for such stocks. So I'll sit on the sidelines and watch it. But I would still stick with a good cash flow generating companies. And defense and railways will come back, but we will need some time now for the valuations to be justified. PSU banks again had run up quite well, but now we are seeing a margin compression coming in. So we are searching for new catalysts, new drivers. The growth is there in credit, but the deposits are coming in at quite a high price. So the margins are compressing, the NIMs are compressing, and that will show up in the results going ahead. That's why we have seen a sell-off in these both FIs and domestic mutual funds have curtailed their positions on the banks. Even private banks have seen some amount of selling in July, as per the data reported. And we have seen that continue in August with public sector banks getting hit more because they clearly have a deposit issue. They're not able to raise deposits as fast as the private sector banks, and the cost of deposits is going up.
Point taken, Mr. Baga. Thanks for that very detailed view coming in. Rajesh, we also wanted to get a lot more of your views, but due to a time crunch, we're just going to come to you and ask you for the picks, the stock picks that you have for our viewers heading into the next week. Tell us what you've picked up.
So the first stock is from automobile space, that is Tata Motor. Short covering is there in derivative data today. The way stock managed to fill the bearish gap on daily chart, we believe that here there is a potential for further more upside. Possible target for Tata Motor we could see towards 1140 to 1150. So one can buy and accumulate this stock with stop loss of 1068. The second stock is ITC. Stock is poised for giving a big breakout of long consolidation range. Stock is now negotiating with its multiple supply zone. The way stock has shown a long built up on the derivative data, we believe that here there is a potential for further more upside towards 520 to 525. So ITC is buy with stop loss of 494. And the third stock is ICICI General Insurance. Again, the stock managed to regain its all-time high trajectory. Stock managed to give breakout of its previous swing high after a brief corrective move towards 20-day moving average. The way stock has shown a long built up, we believe that here there could be a continuity of uptrend. Possible target we can see towards 2115 with stop loss of 2015. One can initiate long.
Right. All right. So these are the two of the recommendations coming in from Rajesh Palvia. Thanks very much, Rajesh. Thanks very much, Mr. Bagga, for joining us today and sharing your insights on the macro front as well as the domestic triggers and the key recommendations coming in. That's all in this edition of Your Trade. Thanks so much for watching. We have, in fact, this has been a very quite a surprising week, but then surprising data came in from global also, which actually shrugged off the worries. Let's head for our next week.
All's well that ends well.
Ends well. Thanks for watching.